Welcome traders, David Dubay over at Polaris Trading Group in affiliation with Infinity Futures. This is the weekly review and preview for the review week of May 15th through the 19th and the preview for the upcoming week, May 22nd through the 26th. Before we get to the charts, industry regulations require that I highlight the NFA Compliance Rule 2-29. In summary, it states that hypothetical performance results have many inherent limitations, and trading in futures and derivatives on futures is speculative in nature and involves substantial risk of loss. Past performance is not indicative of future results. Okay, so with that, let's get to the chart review for the week of the 15th through the 19th. Okay, on the chart now we should see the larger profile picture on the left with a multi-week profile outline here in green. And then on the right hand side we're going to be taking a look at last week's trade action with various levels and so forth. So as a broad overview, we always like to look at the bigger picture first. If everybody recalls, last week was options expiration week, and the big strike price that was in play was the 2400s or the 240 strike on the SPY. That was attempted a couple times on a breakthrough, but as we all know, the price failed at that level with some change in sentiment of what's happening over there in Washington. And again, that was really the catalyst midweek. But at the same time, prices were struggling to find a real good solid bid. And we're going to take a look at the relative rotation graphs that we've been showing everybody over a week. And I think it's important when you take a look at chart patterns, you know, we may say, okay, yeah, hey, look at this, we have a double top here, okay, and so forth. But again, you know, this is all after the fact. What we want to take a look at, and what I try to encourage, you know, our traders at Polaris to do, and everybody for that matter with these videos, is to take a look and they help give you a glimpse of what's kind of driving the price action, you know, in terms of you know, the groups and the sectors. Okay, it's really important to understand the nature of where money is flowing in the marketplace. Okay, now that doesn't help us on any individual specific trade, right, that we encounter, or trade idea or opportunity in intraday, but it does offer us a glimpse into, you know, if prices are struggling at a level. You know, again, there's a lot of big investment money that flow in and out of the market, so we need to have an idea of, you know, where the tendencies of that money to flow. So that helps assess, you know, the levels of risk and how the markets are trading day over day and again week over week. So something that we want to you know, I hope to get across with these particular review and preview videos here. So in this particular section here on the left hand side, that was our last swing from low to high up to about the 2404s, and of course we said that downdraft. Now there's the 50-day simple moving average. A lot of people use that as a gauge, so we put it up there as a reference point and see where price is relative to that. You can see a couple things here, that the gap, all right, that had occurred on the move higher, of course, has now been filled. All right, so that kind of connects, you know, one section of chart to the next. And I've drawn a couple lines here in this kind of magenta color down here at 43.25 and up here at 89.75. Now, what these represent is the 75% retracement level, okay, of the prior swing up or down. All right, so in other words, you take this low to high, retraced back down, it's 75%, and then you take the last swing from last week's high down to the weekly intra-week low, retraced back up, there's your 75% mark. Why is that important? That is something that I've learned years back. A lot of folks are real kind of Fibonacci type players, you know, they're purist, you know, 61.8 and 78.6 and et cetera, et cetera. I find, you know, that works fine overall if you're, you know, if you really want to be specific chartist, but in practice, when things are moving pretty quickly, you want to keep the numbers simple in your head. All right, and I express this to our members, every week. Keep it simple in your head. Know where some major levels are. Bring in your, volume profiles, all of those things. But if you're going to do actual measurements, keep things simple. So I like to frame out a high-low swing in terms of quartiles. Quartiles are simply 25% to the 50% mark, to the 75% mark, to the 100% mark. Okay, so that's something that I do. Keeps life simple, keeps numbers straight in my head, and it works fairly effectively. All right, so we're then once price gets to near those levels, we then can hone in. So 75% retrace of the prior low-high swing over several weeks there pushed us down to the 43.25s. Now, as you can see, market found support and reversed near to that level. Also, as you can see, very high volume multi-week activity on the longer-term profiles here. So again, a lot of confluence down in that area. And again, the big institutions look to buy, these dips. All right, and of course that looks like, certainly looks like what happened this past week after the move down. Again, on the flip side, right, that bounce, all right, which occurred Thursday into Friday, carried pretty much almost 75% of that entire, swing down. But again, look at the high volume profile area there on a multi-week basis. So again, that's also important to bring in and give you some perspective. All right, we're going to come back to the volume chart here on the right hand side, the volume profile, in a few minutes. All right, what I want to get to here is where the activity was last week in the various sectors. Okay, and then this current slide here, it's what we call a perf chart, performance chart for the S&P sector ETFs, exchange traded funds. So this gives us a quick overview of where the activity, where the money was flowing last week, what groups performed, what groups underperformed, and should be no surprise, the groups are basically categorized as cyclical, all right, and aggressive or cyclical, and then defensive. So the cyclicals here, which include consumer discretionaries, okay, technology, there's some materials in there as well, and then of course financials. All right, so it's really important with financials. Now we're going to take a closer look at financials in a moment. The energy group did have somewhat of a bounce last week on a relative basis from some deep oversold levels, and the crude oil contract for July topped $50 there. And then as you can see, consumer staples, which is a defensive type group. All right, again, food companies, those nature of those type companies, more defensive. So on a relative basis, they held out fairly well. Okay, healthcare typically is generally a defensive group, and as well as utilities. So you can see that's where the defensive groups pretty much held the line in the overall sell-off last week. So again, that should not come as much of a surprise to those that are familiar with this. For those that are beginning to get initiated with, trying to understand and get a flavor of where the action is. Okay, it's basically cyclicals and defensive groups. All right, so these are the categories of groups that we look at week over week. Let's take a closer look at the financials in the S&P, and we'll see if we can get what we can glean in there. Okay, so this is a chart, a daily chart of the SPY Spider, and this is taken from stockcharts.com. All right, very good site, so you may want to go visit that site for yourself. But again, what this particular chart shows is the width of candles, which is called candle volume, all right, or it's a derivative of equivolume type analysis. So effectively what it does is the wider the candle, the greater the amount of volume that occurred on that particular candle, okay, for the particular range. So you can see last week we had that gap down, big fat red candle, a lot of volume on that candle, and then as the market came back up, okay, Thursday into Friday, we had somewhat of a price-wise it was a decent bounce. For those that study volume analysis, they're not so they're pretty cautious here because the downside volume really exploded where the upside volume didn't really quite match the downside. So some people use the term dead cat bounce, etc. We'll have to see how the market reacts, obviously, this coming week, all right, after options expiration, which I think had a fairly sizable amount of influence into Friday's action. So we'll need to see, how the markets respond here. If it breaks Friday's low, okay, and Thursday's opening, all right, zone here, then we could see some additional weakness come into play, all right, in the overall S&P. Okay, next chart is the XLF. All right, the financials spider, and again, the reason why I bring this up is twofold. Is number one, the XLF is a huge part of the marketplace, right? Sensitive to interest rates, again, financing needs, etc. So it's really a bellwether of economic strength and activity overall for the market. Secondarily, you'll see that, and again, many of you that are familiar with patterns. You'll see this looks pretty much like a head and shoulders type pattern developing here fairly clearly, and with the neckline there where it says potential chart support down at the 22.80, and that's going to be a big test should the market test that level over the coming days. All right, right now this is the 50-day moving average here, and again, as you can see, when price is above a rising 50-day moving average, the market is deemed to be healthy. Okay, so that's why that is used quite a bit. If it's on the south side of a declining 50-day moving average, you can see over here to the left on the past, several weeks here. Okay, that is obviously a sign of weakness. All right, and again, see that fat, large, equal volume candle. All right, back in March. All right, price was never on the XLF was never really be able to recover after that big sell-off. So again, this is concern for the market, so we need to pay close attention to financials, how it acts at these potential chart support here, should that be touched sometime in the coming weeks, or right? So that's something to be very, very important for the market to big test for the market along with that. Okay, let's take a look at the relative rotation graphs. So for those of you that are unfamiliar with the relative rotation graphs, what this simply depicts is 4 quadrants, top right leading, bottom right weakening, bottom left lagging, and top left improving. So these are quadrants, and what we take a look at is you see these long lines. These are weekly lines, so you can actually take a look at on different parts of the market and see how have they performed historically. What has been their track? Are they strengthening, weakening, improving? What are they? Are they lagging, etc.? All right, so you can see here, we know, we've been talking about this, that the NDQ, right, the NASDAQ has been in the leading group. It still remains there this week. All right, so on a relative basis, there you have it. Utilities, okay, improving to leading. That's not encouraging. All right, when you have utilities in the leading group, that means that the market is becoming more defensive. All right, and then as we look down below here, we made mention of this last week, the transportation. Now again, think about transportation, economic activity. All right, transferring goods, all right, from production to destinations. Okay, so when that is in the lagging group, that is a warning sign overall for the market. Doesn't mean the market's going to crash in any way. It just means it's a warning sign, all right, that the market is the market kind of foresees down the line a little bit. All right, so that's important. It's still in the lagging group. Also small cap, mid cap. All right, Russell and small caps, their trajectory is higher, okay, meaning that they are improving on an absolute basis. On a relative basis, though, they're still in the lagging sector. Okay, the S&P, right, pretty much is going to be right in the middle here. All right, that's since that's the benchmark. So what we want to see is some of the various groups, all right, and how they're performing. Again, particularly of interest are these small cap, mid cap area, of course the NDQ, the NAS, and transportation in this case. All right, so again, this paints somewhat of a cautious market, all right, overall, but doesn't mean that that the market is out of the woods, or it's going to crash in any way. But again, the upcoming week's going to be pretty important. Okay, let's go back to the weekly profile that we use in our trading room on a day-to-day basis. And really what I want to just kind of outline for everybody here is when you take a look at profiles, right, there's a lot of stuff to consider, but what I try to do is I try to break it down for our members that again, easily to be able to easily use and remember what key levels. Here in the S&P, the market has a tendency to move in 10-point increments, right? There's something called the 10-handle rule. Generally, that means is that the markets tend to move in 10-handle increments, okay? And before there's some sort of a consolidation or reaction that occurs near to those levels. All right. So this has been the work chart that we've seen. For those of you that have been watching the video over the past few weeks now, you'll see, be familiar with many of these levels here that we've had. 23.96 up at the top. Okay, that's again the beginning of the breakdown. All right, we had highlighted 96.98 zone as a potential breakdown point. And there, that's where it occurred last week. All right, that's where it all began. And then, as you can see, 96, all right, all the way down to, let me just click on this, and I did this for a reason, all the way down to 46. All right, so 50 handle, was that 50 handle? So I guess 50 handle move, all right, all the way down, and then we get that bounce. But notice we get a bounce, all right, now 56. Notice where the last week's, aside from the breakdown day, which was Monday, and then Friday session, which is depicted over here on the right. So this is Tuesday, Wednesday, and Thursday. All right, the 56 is the lower value area, as you can see here in this last 3 days. All right, so 46, 56. Midweek we talked about the market needs to break above 66. All right, and if so, it would, the next level would be 76 area. So there it is, the low, all right, of the initial breakdown day. All right, there's 76, and then 86. Again, going back a couple weeks, it's a yellow line because that indicated the midpoint of a value area. 1, 2, 3 weeks back, I believe, if my mind serves me correctly. Right, so 86. So again, think about it, 96, 86, 76, 66, 56, 46, all right? There's usually something going to happen around 10-point increments. Now, I try to keep things, as I said, simple, all right? Round numbers, keep it in your head. Now, you can take the range between any one of these 10-handle zones and then break it down and hone in more specifically using profile techniques, Fibonacci techniques, Murray math techniques, whatever you have. All right, so what we're looking to do here is use the profile and outline or frame out the market. That's what I use profile for, the best value areas, all right, framing it out. And then I specifically use other techniques for intraday activity and action. Okay, so hopefully this helps a little bit, kind of gives you a broader perspective. Right, use 10-handle increments. You can use my charts here as kind of an initial reference. We'll be looking at this, over and over again on a week-over basis. Okay. Okay, then just lastly, guys, quick just preview of this upcoming week's calendar. We like to take a look at what are some of the important notations. Okay, home sales on Tuesday coming up. Existing home sales on Wednesday. We always have the EIA report on Wednesday as well. Key number, key thing here, FOMC minutes. All right, we'll get a look into what the last meeting's commentaries were a little bit more specifically on excuse me, on Wednesday, and then jobless claims Thursday, and into GDP numbers and durable goods on Friday. Okay, so that's the last on that. Okay, then just lastly, for those of you who have not taken a free trial with us over at Polaris, please come visit, take a look. Love to see you join up with us. PolarisTradingGroup.com/free-trial is the address to sign up for a free trial. And lastly, you can reach me at david@PolarisTradingGroup.com, or contact Patrick Zielbauer, your Infinity Futures representative, for any additional information you may need. All right, hope this video has helped. Thanks very much for viewing, and we'll see everybody in the trading room each week. Thanks very much. Enjoy.